How much weakness is there? Do you give credence to this story that the consumer is fragile?
I think when it comes to the consumer, what we continue to see is a somewhat steady consumer. I think what we've heard from most of the companies that we cover is that not much has changed with the consumer over the last 6 months. They're employed, wages are growing, but they are being choiceful. And part of the reason why they're being choiceful is because there has been a lot of inflation over the last couple of years. Their money doesn't go quite as far. So you are seeing choices between consumables and discretionary. You're seeing choices between services and goods. And I think that's what's differentiating maybe some of the different performances that you're seeing out of retail coming out of the second quarter.
So how do you square this idea that we keep hearing this, and yet margins are expanding?
Yes. Well, there is some growth, so there is some leverage in some of these retailers' models. But at the same time, you've seen costs dissipate, especially on the freight side of things. And so there has been some improvement in margins as costs have come down on freight.
Okay, so it's more of that story and not so much that AI is creating this incredible efficiency that's overwhelming any potential price losses and pricing power that they're losing.
Not yet. I mean, we are starting to hear more, of course, about AI, just like we are across all the other industries, but it's much more nascent and more about efficiencies with regards to getting more efficient with how they catalog online with their e-commerce and maybe freeing up some tasking for their labor. But there isn't anything of scale yet that we've seen that is revolutionizing, what's happening with margins in retail.
So just to be clear, when people say maybe some of the increased productivity that we're seeing that's leading to these higher margins stems from the idea of AI making inroads, not really seeing that quite yet.
I don't believe so. Again, it's being talked about, but I don't think it's being touted necessarily as one of the bigger drivers of why margins are better year over year.
When people talk about a more choiceful consumer or a more discretionary, how much are they talking about just a sort of stagnant pool and greater competition to get that pool? And I'm thinking about higher income individuals. And increasingly, the holy grail has been just to get a chunk of that.
Yes. Well, they are speaking about the higher income individuals, too, with the choiceful consumer. And I think it's maybe less about consumables versus goods or consumables versus discretionary, but it's that services versus goods. Part of what we saw during the pandemic was a really heightened demand for goods, things, apparel, home goods, things like that, consumer electronics. And then as soon as the world opened up, you went back to services. We haven't quite seen that pivot back to discretionary goods. It was only on Target and Walmart's conference calls that they have just seen some stabilization in goods. So it's that choicefulness that's happening at the higher end as well, because they're choosing between services and goods.
So you've been doing this a very long time. You've been at Goldman Sachs 6 years. Before that, you were at Citigroup and Credit Suisse. And this has been a conference that's been going on for 31 years. How is this time different in terms of just the tenor of certainty or lack thereof, in terms of the economic cycle, as well as the interest rate cycle, as well as some of the technological overlays that you're seeing?
Yes. So the cyclicality is always the name of the game, right? Year to year, we're going to be in different cycles. And so certainly right now we're discussing about, the health of the consumer because of the interest rate environment we're in, because of what's happened over the last 5 years. But I think what's so different about the conference this year and what companies are going to be talking about is we are entering year 5 post-COVID. And most of the companies here had benefited in a significant way during COVID when everyone was shut in and needed to be entertained or needed to buy food. And now we should be entering a period in 2025 where it's more normal for consumer behavior. And so we're going to be focused on asking, in addition to the macro and what the expectation is for the health of the consumer, what their behavior looks like in 2025.
What are you seeing? What's the answer to that?
So we're still seeing that choiceful consumer, but as I mentioned with Walmart and Target, they are starting to see some stabilization in discretionary goods. And so our thought is that you will see more normalization of the consumer, balancing the choices between goods and consumables and services.
How much do you see the most powerful companies consolidating their market share in a way that we haven't really seen in the past? And I'm thinking of Walmart, I'm thinking of Amazon, I'm thinking of some of the behemoths.
Yes. We do think that that is an element that's happening across retail, too, the haves and almost the have-nots. And part of the phenomenon is that the scale and the one-stop shopping is really appealing to the consumer. So if we take Walmart as an example, it's not just the value that they're offering the consumer, the discounted prices, the rollbacks, but it's the convenience. It's the fulfillment optionality that you can get with delivery or click and collect or buy online and pick up in store.
What do you think is the biggest anxiety at this conference for the 80-some companies and executives that are here?
I do think it's figuring out the consumer. That's probably one. I would say tariffs is another. It's a big question mark as to what that looks like post the election, and it could be, very costly. And retailers are going to have to figure out what they do with their pricing as a result of that.